And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show that we bring you where the action is in the markets. And another very tricky week, I'd like to say. And we have lots to cover because there is quite a bit going on, certainly beneath the surface of the markets. We're going to go ahead, as usual, and take a look at the broader markets, at the indices, and see where we stand at the end of this week. We've had a number of leading industry groups that pulled back rather sharply. So in addition to identifying and sharing with you stocks that are in the throes of reversing their downtrends, you're going to want to be on the lookout or have the tools so that when really beaten down areas, technology, of course, does begin to show more in the way of signs of reversing their downtrends. And then year-to-date winners are bouncing back. We're going to share that as well. And then stocks of interest that are currently at a new high in price. And lastly, as always, I like to share with you some of my base breakouts, and these are going to be names that are in what I'm calling newer groups, newer to the party, if you will. For those of you not familiar, I, for many years, was with William O'Neill and Company. And of course, that base breakout is, as such, one of my favorite chart patterns. I always, too, like to share with you the events of last week that helped shape the trading activity. We did see durable goods orders did decline in February. A lot of the weakness that we are seeing in different areas, consumer spending did fall the most in 10 months. That it is being looked at because February actually was a very tough period. We had a freeze occurring across many areas of the US, so it is not really being heavily weighted as far as the outlook for an economic recovery. We did see weekless jobless claims. They came in at their lowest rate since the pandemic began. That, of course, sparked a nice rally into the latter part of the week. Core personal consumption, and this is what the Federal Reserve uses as an inflation gauge. It did rise to 1.5% in February, well below that 2% level that the Fed is on the lookout for as far as inflation fears. And we did see the 10-year yield inch up just a bit after pulling back earlier this week. So those are some of the better items, certainly some of the more impactful. As always, the show is designed to help keep you on top of certainly the action, but also help prepare you going into next week and beyond. We have an eye certainly longer than just next week. So here we are looking at a daily price chart of the S&P 500. And as you may know, those of you that are regular watchers, hello, but you others that are new, I'm going to share with you how I use these shorter term simple moving averages. And ideally, I do want to see the indices trading above these shorter term moving averages. Now, I did jump the gun here because I cited that the S&P was back up above, actually it is above that 21 day, so we are in good standing. And we did very briefly break back above the shorter term 10-day, not quite closed above it. So we are certainly in good standing. The RSI is up here trending positively and above that net neutral zero. Stochastics are trending downward, but still remain above that 50. So net, the S&P 500's near-term uptrend firmly in place. So as usual, we want to take that information and drill down even further. Good to know that the broader markets are in good standing, but how about those 11 underlying sectors within the S&P 500? As always, you want to identify where the strength is behind the curtain, if you will, and within that, be able to play that strength as long as it does look sustainable. So here we have those 11 sub-industry groupings among the S&P 500, and I've gone ahead and added that RSI, a relative strength indicator, sorted it in descending order so that up here in this upper left quartile, we are going to be point it to strength. And take a look, lots of newcomers, if you will, to the broader markets uptrend here. Most notable is a pretty sizable move into staples. And this is something that I've been talking about. I believe I did bring it up. Yep, I did bring it up last week's show and talked about why some of these staples. And then those of you that are subscribers to my MEM Edge report, I have been highlighting this, and I do have a number of names that we will be adding over the weekend to our suggested holdings list. We also can see real estate stocks. These are going to be your REIT stocks. They were the best performer for the week, up 4.2%. We can see this nice breakout of this flat 2-week base and a number of solid areas there as well. Now, those of you, I'm sure you're familiar that staples and REIT stocks, they do tend to perform well during periods when the markets are deteriorating. They're viewed as defensive, but there are other dynamics at play here as far as these groups. Some of them within staples has everything to do with inflation and rising prices for these staples. And then, of course, real estate stocks at this point, rather than being defensive, it is more of a recovery play. Industrials here, up here at the forefront, it did recover from an earlier week pullback, so nice to see that back up at near-term highs. Basic materials, another huge recovery. The industry group midweek was down actually quite a bit, and so a lot of the news that came forth subsequent to that midweek period has pushed these cyclical recovery stocks back into play. Utilities, another defensive area that is also having a good week, up 3%, well above the S&P's 1% performance. Again, it's kind of a mixed area here. Hopefully I'm going to be able to share some of those utility stocks because there are underlying themes popping up as far as non-defensive in that sub-industry grouping. Healthcare, another defensive area, finally springing to life, if you will. This has been a really tough area since this late January pullback, and it's been kind of waffling here, trying to grind higher, but today very decisive, up 2%. We're going to share some of the names there, and you'll see pretty quickly where the strength is in these healthcare stocks. And then down here, lower quartile, we can see that technology continues to languish. A couple of bright spots continuing to emerge among tech, but still a weaker area. And then likewise, communication services really got hit. A couple of stocks definitely took it on the chin today. So then from here, beyond the S&P 500, we want to go ahead. I'm going to share with you, we're going to drill down even further beyond those sectors. We want to take a look at some of the sub-industry groupings. In my work, I do tend to favor growth stocks, but I definitely will embrace where the momentum is, because looking at those industrials and cyclicals, we have been with my MEM Edge report into those groups since last fall. We have a number of big winners, and we are continuing to add stocks, particularly to industrials, as they continue to show outsized momentum. But here we are with these sub-industry groupings, again, that RSI descending order, and I'm going to share with you the certainly relatively strongest area, and this is transports. The Dow Jones Transportation Index, we did see a very big merger among rail stocks take place this week. That in turn boosted other rail stocks, but airlines are starting to reemerge as well. And this is, again, recovery. Transports, it's all about transporting purchased goods. So that is certainly bullish for the markets. And then from there, the Dow, let's just take a quick peek here, because we can see that it was very close to recapturing that recent high, up almost 1% for the week. And as we go ahead and drill down, I'm going to share with you areas that have pulled back. This is KRE, that regional banking area that we actually have talked about really since last fall when we got into some of those winning bank stocks. But take a look at this pullback right to that 50 day simple moving average. Today's 2% rally pushing it back above those shorter terms. So today on these downtrend reversals, I'm going to be sharing with you, among other, pretty much every industry group, but we are going to look at a couple of banks. And a pretty sharp recovery here on small caps. We're not quite out of the woods yet. It's down almost 3% for the week, but it was down over 7% midweek. So nice downtrend reversal, another recovery play with these smaller stocks. And then these lagging areas here, this is software stocks continuing to suffer, as such with biotech as well. So I'm going to take a very brief break here. When we get back, we're going to share that anatomy of a turnaround, stocks that I've highlighted that have worked, and then from there, candidates that are looking attractive right now. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. First up, I am sharing a stock with you. I did a segment with StockCharts.com earlier this week, and about once a month I do take part in that. It's called Your Daily Five, where each individual that is invited gets to share 5 top stocks, and I did that last Monday. You can check that out on StockCharts TV. It was, of course, recorded. And what I'm going to share with you right now are stocks that I highlighted on Monday as downtrend reversals. And if you go ahead and look at it, it's a 10-minute video. You'll see why I focused on this particular area and then these stocks. But let's go ahead and take a look at I'm going to share with you just a few of these names. Pretty much every one of them worked, and really quite well. So that's why I'm going to share it with you again today as far as what attracted me to these downtrend reversals. We're looking at Target TGT. The stock hit a new high here back in the beginning of the year and then subsequently pulled back. This was in line with a lot of these big box retailers. This gap down here was all about earnings. The company put in record numbers, really superior earnings. However, management was loath to give guidance going forward, and that in turn spooked investors. But let's take a look at, this is on Monday, this arrow when I highlighted the stock as a reversal candidate. One of the first characteristics is going to be the stock breaking back above each of its moving averages. And once it breaks above that 50-day, for me, that's going to give me quite a bit more in the way of confidence, because that upside resistance has been diminished. And also, I was taking a look at the volume characteristics. You want to see volume as that downtrend is reversing, giving you that sense that there are individuals interested and it is under accumulation. So subsequent to that, we can see the stock has advanced. And then today, we did have a very nice add-on as far as that downtrend reversal taking even further shape, because we now have a nice multi-month base breakout on big volume. So that is what you want to be on the prowl for. Let me see, I'll share with you just another name, because from here I'm going to share with you candidates that are early in their downtrend reversal, similar to when I first highlighted Target. Let's take a look. This is another name that I highlighted on Monday. This is Sprouts. SFM is the ticker symbol. It's a smaller, more regional supermarket stock. And so a little bit sloppy here, but it was another company that really posted superior earnings here in the beginning of March. That's this bar here. Didn't get a lot of attention, but when I actually highlighted it here as it broke back above this 10-day simple moving average, and also highlighted that it was poised for a base breakout at 25.7. We did get that base breakout, and on Tuesday, and then we can see the stock, actually it's up 6, let's just take a look on the weekly and see. Yeah, so up 16% on the week, but more importantly, the characteristics that brought this stock to my attention: first, strong earnings; secondly, poised to break out; and then nice volume characteristics with outside upside momentum. One last one that we can look at, it's a company that did report earnings this week, Restoration Hardware, and this particular stock actually gapped up prior to their reporting of earnings, and that's a very bullish sign because it gapped up on analyst upgrades going into the report. Most analysts will not put their neck on the line unless they really dug in and had some just instinctive sense that the company was going to come in with good numbers. They did, in fact, do just that, and we did see another base breakout. It's up actually another 9% today. Nice volume characteristics, and the stock still could very easily trade higher from here. So that is a look at, I have other examples if you want to go ahead to that show your daily 5, but let's drill down and take a look at some candidates currently that we can take a look at. So first off, we did talk about consumer staples coming into play. So I'm going to share a couple of candidates, downtrend reversal candidates from that industry grouping. First up, we have Monster Beverage, MNST, and a couple of characteristics here I'm going to share with you that bring this to light for me. Another stock that peaked in price. So for my work, when I am searching for downtrend reversals, I want to see stocks that recently hit a new high. They have an ability to have a sustained uptrend. And in fact, that is the case. Staples really have sat out most of the recent rally over the past 2 months. So a lot of these names are coming back into favor, but you want those prior winners. It's going to imply they do have growth prospects behind them. So what we're looking at here is the stock very decisively breaking back above all of this noise, these simple moving averages. It did so on very decent volume. We can see that the RSI is positive, but let's take a look. This is the most interesting, or one of the most interesting signals to me, is that this MACD is now just inching up above that net neutral 0 into positive territory. And you can go back historically and see the significance of the MACD just turning positive in line with breaking above shorter term moving averages. Let's move on because, gosh, I do have an awful lot of stocks, but I think we're going to get through a lot of them. So next up among consumer staples is a well-known company. This is Procter and Gamble. PG is the ticker symbol. I didn't have a lot of time, but I would love to dig in and uncover what precisely is what category, why this particular turnaround is taking shape. But we can certainly look at it technically, and that is that break back above, in this case, the 200-day simple moving average, nice volume characteristics, MACD turning positive. You can see that your RSI, this is your relative strength indicator, and it's trending upward above 50, but it is up here above 70. Very simply, it means the stock near term is overbought. But take a look, Procter & Gamble can remain overbought for some time, so it's not going to be quite as concerning for me, but hopefully you can see those characteristics that are drawing my attention to Procter & Gamble. I think we have more time for one more in this area, and that is Colgate Palmolive, CL. And certainly other than technically, I can tell you other characteristics and reasons why, and I'll be covering that in my MEM Edge report over the weekend, which you can trial for 4 weeks for $7. If you use the link below, you'll definitely want to be on top of this move back into staples. We can see a pretty decent volume here as the stock breaks back above this 200-day moving average, your RSI, and your MACD just dipping into positive territory. So those are some candidates, certainly better known names within staples. And let's go ahead and take a look at other industry groupings and downtrend reversals. So we talked about industrials. Let's go ahead and pull up that chart very quickly here, and I'll share with you what we are seeing. Industrials hit a new high last week, very constructive, but in the beginning of this week, pulled back very sharply. This is something that I talked about on Wednesday. It was down 1.5%, but industrials did go on to end the week up 2.2%. So nice downtrend reversal on that group. Let's go ahead and take a look at some of the underlying stocks within industrials that look kind of interesting here. This is a stock that had been on my MEM edge list back when it was doing well, for lack of a better word. But we did remove the stock once it broke back below this 50-day simple moving average. And we can see those same characteristics. It may feel repetitive, but definitely worth noting the stock breaking back above these simple moving averages, constructive RSI, MACD just now turning positive. So again, had those prior I will be on the lookout to see if the company has been able to regain its prior glory as far as those growth prospects. So moving right along among industrial stocks, we can take a look at a stock that really had not gotten quite as beaten down. This is Top Build, BLD, and we are seeing certainly one of the best industry groups this week was home builders, and then also building elsewhere. This is all about the recovery play, and then consumers' continued interest in those big ticket autos and housing. But take a look. This is what I talked about as far as decisively breaking above those simple moving averages with your outside momentum indicators turning positive. So from here, let's go ahead because we want to take a look at other industry groups, other names. We can look at basic materials, and that was another very big recovery area as far as going from being down quite a bit to closing the week up 2.6%. So among these basic material stocks, we can take a look at BMC. Let me go ahead and pull that ticker up here for us. And that is Vulcan Materials. And a little bit dicey. You're going to be just know that you are getting into a stock that is a little bit volatile here, but it does have those characteristics that I mentioned as far as breaking back above these simple moving averages with an RSI that's trending upward, your MACD just now pointing upward. Ideally, you'd like to see that black line up through the red signal line to give you a little more confidence that there could be further upside for Vulcan. So I mentioned to you as far as bank stocks and financials. So from here, we can certainly move on and take a look at some of these regional banks. Of course, PNC is large as it relates to these regionals, and a lot of these banks did peak in price here in March and kind of bounced around quite a bit. And this is very much in line. It's been a very tough, I'm sure everyone out there has felt the pain of March. March seasonally is a very difficult period, but for some reason this month, this year, it felt really particularly a lot of fits and starts and back and forth. Would have been better to just go on vacation for March and check back in next month. But let's take a look at the characteristics here because it does have that concept of breaking back above. Now, we've seen it break back above in prior periods, so it's not going to be quite as convincing. Let me share with you what would be more convincing, because this is an area that I'm very familiar with. When I do add a stock onto my list, I then very closely provide alerts as to whether you should buy the pullback, when to get back in. So let's go back historically to early February. You are going to want that nice black line up through the red. That's going to take us down a little bit further here. And then in conjunction with the price break above, we did get bullish back again on a lot of the names on our in banking on our list when this downtrend reversed. So not sure if we're quite there yet. PNC is not one of the names on my list. I do have other stellar stocks, and I'm going to dig in over the weekend, push my shirt sleeves up, and really get a nice formulated opinion here. But here's Bank of America, of course, a very well-known, not so much a regional name, but we can see that it pulled back very orderly to its 21-day simple moving average. Caught my eye because of this gap up. To see a big bank stock up almost 3% is really quite, it's quite a bit. And we can see the nice big volume that the stock did experience today. And this was all about news, the Fed allowing these banks to repurchase shares and increase dividends. So a lot of action going on there. I'm going to move on to energy stocks and share with you that same concept as far as this pullback. Energy stocks certainly respond to the price of oil, but there are an awful lot of other dynamics at play here. Of course, as people get more mobile, it's all about the increased use of gas, not only among airlines, but individuals as well. So here is the group as far as potentially reversing that downtrend from here. I'm just going to share a couple of stocks with you that you can keep on your radar. First up is PXD. This is Pioneer Natural Resources. Really didn't pull back as much, and that is what you want to keep in mind, because those stocks that held up, in essence, that are able to buck the downward pressure happening elsewhere, oftentimes will go on to greater heights. So PXD also has big growth profile, 332% as far as earnings growth estimates for this year. And we can see it's broken back above those shorter term simple moving averages. One other name, because I want to be sure that we get into some of these other groups and share some stocks there. This is Canadian Natural Resources, CNQ, another name that did not pull back as much and gapped up today quite nicely. Let's go ahead and take a look at another area. And I did want to share with you that even though technology overall is struggling a bit here, I did want to share a stock that had hit a new high, pulled back. This is Dell. It's all about purchases of not just laptops, but desktops, people continuing to hunker down and work from home. So we can see Dell did break back up above that 10-day with that RSI trending upward. So I think I'm very close to running out of time. So I did want to get to another area that I said that I would, and that is stocks hitting a new high in newer areas. And so let's go ahead and take a look at a consumer staple stock that is hitting a new high. This is a name that I've talked about in the past, and it's a super high yielder. Let's go ahead, and it did receive an analyst upgrade today. So certainly this gap up, huge volume, and we can see actually it's a little bit overbought, would not be my top pick here. We can take a look at SHW, another stock that was a big winner certainly back here and is now hitting a new high. Lots of upside momentum. This is Sherwin-Williams, SHW, and I believe I am out of time. So as mentioned before, go ahead and use that link below. You'll want to take that 4-week trial, stay on top of the markets, uncover when it's safe to get back into tech, and really be alerted to these newer stocks in these newer groups as we add them to our suggested holdings list. Have a great weekend, everyone, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.